one of the obvious things to me is that the community of Splinterlands is amazing, right? We have a very large community of people who are contributing to the ecosystem. There's a lot of energy that's exerted on the game, in the market, also in all the ancillary products that come along with that. We have people that are building products on top of Splinterlands. That's exactly what you want to see when you're growing an ecosystem, right? So centralized exchanges, I'm not really a fan of. And as we've kind of learned and as we've seen over the last 3 years, they typically tie into where most of the issues actually are in the market, right? I don't have to say much more than just saying FTX, and everybody here would probably understand, what that's like. And I can tell you a little bit about the racket that goes behind the scenes. So you have market makers that are trying to make the markets for independent projects, let's say Splinterlands, for example, who will take your liquidity and they'll put it on exchanges, and then they'll use, the idea is for them to create volume and liquidity for there to be tradable assets always available in those markets. But what you don't see is behind the scenes, there's obviously bad actors who are arbitrating, or, there's, for the most part, they're arbitraging the value from the centralized exchanges to what's available on decentralized exchanges. And when you have that, it's not really good for the actual price or the value strategy of those tokens. It actually creates a lot of downward pressure by taking, whenever you have high prices on central exchanges, to take the liquidity off those exchanges and go and liquidate it on decentralized exchanges. And that's probably one of the large issues that we would have faced, because your big market makers that do that are going to be like the FTXs, right? And they're doing that for all of the exchanges. So, they're all kind of in cahoots, but it's kind of this unspoken truth about the way that it works. So you're kind of paying for a service to create liquidity and to create a market for you. But at the same time, they're also playing against you, right? And there's really not a whole lot you can do about it. But when you start using decentralized exchanges, that stops, because, for the most part, what we've seen kind of happen over the last couple of years is decentralized exchanges have really eaten up a majority of where the liquidity and where a lot of the LP is coming from. So, obviously, first there was Uniswap. When Uniswap on EVM or Ethereum virtual machines first launched, it was actually just, for the most part, you could just trade Ethereum on there, and then it was Ethereum to DAI, which that's MakerDAO's DAI, which is stable coins, and then they got into multi pooling assets, which would allow you to stake any kind of ERC20 tokens on there. And I think we're going to continue to see that evolution. So I was really early in the Uniswap. A lot of my team, when I was actually working on this, had bought into the Uniswap Unisocks token. I don't know if you remember that, but Uniswap had tokens that they were selling that were also indexed to socks. And so they were tied to a bonding curve. Every pair of socks that you bought was more expensive than the next. And they ended up getting up to like $75,000 for a pair of socks, right? And that was all to kind of prove a point that bonding curves and very simple mathematics were going to dictate the way that these markets work. And then, obviously the proliferation of automated market makers has been a wild success, right? So if you think about that, then the market motivator is really just about how many people are behind it, right? So that's the beauty of decentralization. As more people begin to adopt it, the more it expands out. And then you start to get a really good diversification of pools. And when I say a diversification of pools, what we're looking at is taking tokens and actually pooling them with other assets, right? So here in Splinterlands, we've got DEC and SPS. Those are our most common tokens. But if you're trying to diversify your markets, then you would start pairing them with other projects' tokens, right? And in doing so, you're going to start to see prices of those assets compare across multiple different markets or multiple different pools. And the beauty of this, really, like if you think about, more market motivating forces, would be having a lot of different price discrepancy between tokens across multiple different markets, right? So that causes a lot of really cool things to happen. So as you start to get these these price discrepancies, one of the most valuable things that happens in decentralization is volatility. And when you have volatility, that means that there's an opportunity for arbitrage. And then there's a lot of different ways you can do arbitrage. One of the most common that's used in decentralized finance is triangular arbitrage. And that means that you're arbitraging between two assets, but you're using a third asset in order to do it. So you could go, I'm just throwing some theoretical token names out there, but if you have token ABC and you're trying to get token XYZ, you could get that trade to happen, but in order to do so, you have to trade, from token ABC to token DEC, let's say to DEC, and then back into XYZ, right? And we don't see a lot of that stuff happening with our markets right now. I mean, there's a couple different reasons why, and obviously there's been, a lot of talk about, changing things up. But I think it's really important for people to understand, why it is you would want to do something like that. So, yeah, I hope you don't mind me ranting here for a second, but the idea would be that we have a lot of our liquidity, or a lot of the Splinterlands ecosystem exhibits what we call extreme concentration, right? And in extreme concentration, you have a really, really heavy market. They call it a heavy market because it's also called a drag market, or it's a market that has a lot of downward pressure, and that's because you have a ton of your liquidity stuck in a single location. And when that happens, you tend to only have surface level activity, meaning that only a small percentage of the total amount of liquidity is actually being traded, or is actually being swapped or locked, right? And so we tend to have that because we're on an ecosystem. Our ecosystem is Hive, right? And Hive has progressively, it's been great for Splinterlands. It's great for the game. It's great for the community. But it also, it's not like, if Splinterlands is 97% of the activity that happens on Hive, there's really, Splinterlands is like the only incentive for people to actually bridge into Hive, right? So it's very interesting. I mean, we have this, obviously we've got a great opportunity to expand our markets, but we also face a couple challenges. And I think that over the coming time, what we're going to start to see is there's going to be a higher demand for us to actually expand our markets and to start moving into making LP positions across many different tokens, not just the Splinterlands ecosystem itself. I can't dictate what those tokens will be. It does give us a lot of opportunity to partner with a lot of these different chains, but it also means that there's a lot of other things that have to happen. You have to have bridges in place. You have to have people that are familiar with the differences between chains. You have to have contracts that are launched on those chains, right? So there are different vectors for attack. There are different vectors for issues to happen, but I would say that because of how we've done this and how good Splinterlands has been about kind of managing everything, the bridging partners that we have are very solid. The contracts that we have been tried and tested. We already have existing contracts on Ethereum. Rooney was launched about a year and a half ago. It's one of our largest EVM pushes so far. And then, with other products that we put out there too, I know GLX has contracts on a couple different chains that haven't been launched yet. So it's not impossible. It's not incredibly hard to do. It is extremely strategic from a point of making markets, right? But really, more than anything, it creates a lot of value for the people who are already invested in those tokens. The primary market force that creates value for people is actually LP, right? Creating liquidity pools and liquidity positions, and then liquidity mining or yield farming, right? So I think it really expands the opportunity for people to start to understand how assets can actually start working for them in a lot of different ways. It creates a lot of color for the different types of markets that we're trying to get into. And it also incentivizes other projects to work with us, right? Which I think is also very important. Hopefully that's not too much information, but that's kind of where my head's at.
Yeah, I mean, I think it's good to kind of like just give people some background and like some basic level of understanding of why these things are important. And like after like the meetings I've had with sushi, I didn't realize like how much sushi has evolved over the years to where now it's like tied into what is it, like 20 something chains. It's it's like pretty
Mhm.
crazy. And they also have like this like they have an X swap feature now to where you can basically just kind of like hot swap between chains like all on the sushi site. And that's one of the things that kind of like got me looking further into, like the possibilities of like how can we expand beyond just like our own like little bubble here. Because like look, I have literally been on Steam since the beginning. Like I'm not positive like if before like Ag and Matt, like I'm pretty sure I was on Steam before Matt, but like that's how I met Aggro like back in the day. And like so I've kind of like known a lot of these guys for a long time. I mean, it's probably been what, like 7 8 years now. It's been a while. But yeah, it's been interesting. It's been a fun ride. But Hive definitely does have this problem that it's kind of like its own like little it's like own little island in isolation, right? Like it has trouble bridging out. And like we do have Hive Engine, which kind of like lets us bridge and do some stuff. But like we run into other problems, right? Like our token is native to the Binance Smart Chain, so we have to use bridges to move into the game. We have to have a different bridge to move into Hive Engine, and I think like that's all fine. But like what we need to be doing at this point, it seems like we need to be like looking at more ways to expand. I guess you'd say like horizontally instead of vertically, right? Like we have pretty deep liquidity, as far as like the value of our community. I would say like we have some pretty deep pools. Like we have multiple $1 million+ pools, and it makes sense because we're also printing like $100,000+ a month in
Yeah.
tokens to rent that liquidity. So like one of the things that like Sushi kind of turned me on to is the idea of bonding. And the more I learn about it, the more I think it's just a smart play, right? Like one of the big things with the LP providers is like they're obviously there for the yield, and I mean it makes sense. Like
Yep.
currently we can look at like our staking APR for SPS, which is like 13% or something like that now. I checked yesterday, but so you look at like you can lock up your tokens for a month and you can get 13% APR, plus like your battle rewards or whatever. And you look at the like some of these LPs paying like 40, 50, even like 60% sometimes, and that's not trading fees. That's just flat APR that we're paying with SPS. And it just like it doesn't feel sustainable to me. Like it's easy to like pay and rent this liquidity, but what the problem is that like we know there's a deadline. We know that in 3 years, like we hit that expiration point where we run out of this inflation to basically keep renting or borrowing this liquidity. And like that's to me the main reason why I've been like we have to find a better way. Like there has to be something we can do that makes more sense than this, that like basically doesn't leave us with nothing, in 3 years. And yeah, like coming into bonding, I really feel like it's the biggest win-win like across the board, right? Like it's a win for the
Of
DAO
course.
because instead of just like throwing out token inflation, we're going to be owning something. We also get to expand outwards and kind of like bridge out into other communities, which could help. But also what you were kind of touching on earlier there, right? Like the more pools we have, the more chains that we're on, it creates more volatility because we have more tokens that are fluctuating in prices against our own token. So then that will also increase the amount of volume that is going on chain. And then as far as what does this do for the LPs, right? Like the people that are currently parking funds into these pools to earn this yield. So like I'll tell you exactly what this does for them. Let's say hypothetically we take all the inflation that we're basically paying out right now to rent pools, and we use that same inflation to start opening new pools or to start incentivizing new pools with some sort of bonding mechanism on multiple chains. Even with a 5% discount, they will be earning 60% APR. And like we ran the numbers the other day of what what this means for the DAO, right? Like, what is the time for the DAO to recoup that 5% discount? And I want to say it was 3 months. Like, I'll have to pull up the numbers for everybody. But yeah, like I want to say it was like maybe even slightly less than 3 months. It's like somewhere right in that ballpark where you basically get full ROI, so where the DAO's made whole, even with that 5% discount. And like we're essentially left with a pool that generates income going forward for the DAO. So like this is such a like drastically different approach to what we've been doing. And yeah, I just like, to me it makes so much more sense. It's like the perfect way to go out and start building these new pools. If we want to use some sort of bonding, even like whether that's sushi, whether we want to create our own, like the idea that we can just essentially offer a 5% discount, which gives higher APR to the people that are like looking for that yield, while also giving us something permanent, seems like a much more well-rounded approach to me. I mean, what do you think?
So I'm very optimistic. I believe that Splinterlands has been uber conservative in the fact that we have really stuck most of our market on Hive, which is great because it means here as we begin to look at opportunity, we haven't exhausted any of our opportunities in that space, right? And I think that's one of the one of the unsung things here is that with all of the craziness that's happened with Splinterlands and the price volatility in our tokens, if you think about in that relation to everything else that's going on in the market, we have been fairly isolated on Hive Island. You know what I mean? Which is good. It's great for us, actually. It's served a very great purpose for us. But as we get, we bear closer and closer to that date that you're talking about. We have to start to observe what our options are. And this is where I become very optimistic because we haven't done really any of that. We haven't explored any of these options. And we have a ton of options now. And after, we go through these capitulation moments in the market where, you'll see the bad actors get weeded out. And for the most part, the resilience of decentralization has actually done phenomenally well. I don't know if you remember just last year when USDC was going through its, they had lost the peg to the dollar, which was terrifying at the time. But they recovered rather quickly. And you're talking about market forces that are, could have spelled disaster for crypto, but decentralization did its thing. And, most of us understand how, these one-to-one relationships work between tokens and, what I would say, dollars would be still considered fiat or real world assets. They still maintain their value. And that's the trust that goes behind the system. That is extremely resilient. If that were, at the same time, Silicon Valley Bank, they didn't last, right? So I believe that Splinterlands has really yet to touch any of the opportunities that it really has. And in doing so, there's a lot of great partnerships. There's a lot of great people that we'll learn to work with. But that's really up to the community if they want to do that, right? And I'm fully behind it because I also believe that it's one of the things that will make us resilient as well. But we have to be selective. It also gives meaning to a lot of the other projects that are, tied to Splinterlands. I know other people have tried to launch tokens. Those tokens haven't really taken off, or they haven't really found a use case in the ecosystem. This provides opportunity for things like that, right? So, without honing in too much on just what our problems are, I will just say that when you have a lot of liquidity stuck in a single spot, it tends to get stagnant. And when you have stagnant markets, those market forces tend to be a drag on price, right? It's not necessarily a drag on volume, but it is a drag on price. And asset price is very important to the DAO. It's very important to us behind the scenes who are working on the game. But it's probably most important to the people who are invested in it, right? The players, the community, right? So let's just think about this for a second. Like, what are the benefits of doing things like this? I'm not necessarily going to make a push for any particular chain that we would want to go on. I'm just trying to make more of the argument of why it would probably solve some of the issues that are facing our market. And it's really not that hard to understand. So You typically have the balance is between very deep markets and very thin markets. And when you have very deep markets, you have more of what we call price certainty. Because if I were to take, $100,000 and try to go and liquidate it in a pool that has $10 million in it, it's really not going to affect the price that much, right? But it also means that people who are trying to make plays on price or speculate on price, they're not very incentivized because there's not a lot of volatility that's happening. There's no way for them to, you know, basically buy low and sell high because there's more of a market push or there's more weight on the market to hold down the price, right? So that tends to limit activity. And so if you think about the other side of that, thin markets, right? In a thin market, it doesn't take a lot to make the price move at all, right? If I try to take $100,000 and go and move it on a market that has $500,000 depth to it, I'm going to move a substantial portion of the price along with it, right? So when that starts to happen, you begin to create, volatility in the price. So you have less price certainty, right? Um, and so, one of the things that is great about that is, it incentivizes people to move capital around to take advantage of arbitrage. But there's not a lot of liquidity for them to do that. So they're moving smaller amounts of money to make a higher rate of return. But it's, at that point in time, you can't really move a whole lot, right? So you have to be very selective about what chain you move to, how many hops it takes for you to actually execute the arbitrage, right? How many fees you're going to pay in order to do that. So, playing back, there's obviously a healthy mix of both of those, right? And I think what happens is it's really something that the community should figure out and they should actually put forward with their own capital, right? And in doing so, it's a free market. We let the free market do its thing. We'll begin to see the prices begin to toe. Um, you know, Ideally, what would happen is you would begin to see, excuse me, prices fluctuate, right? And as you start to see the volatility in prices, that's going to incentivize people to start moving assets out to other chains. As they start to move it, obviously there's fees that are being incurred. So there's a bit of a first mover's advantage that comes along with it, right? If you're making liquidity pools on different chains and you start to see liquidity move over to those chains to execute transactions, then you're going to see fees go up. And as fees go up, that incentivizes everybody, right? That's what we want to see. We want to see people actually making returns on the liquidity that they're providing, right? So that's how you incentivize those types of behaviors. And like I said, Clay, we haven't really done any of this stuff, right? We have a couple of exchanges that we execute with, on Hive. And obviously we've got pools that are on some of these EVMs, but not a lot, right? And we haven't really create any color in those pools either. Mixing with other tokens, finding other ways for us to bring fiat providers. That's another big part of this too, is that it becomes very easy for fiat on-ramps to find liquidity and to source liquidity across multiple different chains as well. So it makes it very easy for them to tie into being able to bring new people into the ecosystem. That's obviously been a challenge that we face. There's very few fiat providers that provide Hive exclusively or provide Hive out of the box, right? But it makes it easy for them. They can say, "Oh, okay, I can source liquidity from 3 or 4 different chains across 3 or 4 different markets," right? And when you start to see that stuff happen, I think what we'll start to notice is that with the size of our community and the scale of our market, that we've had this well, I would say we've had this opportunity, but it's kind of good that we haven't really done a lot of this stuff in the past yet. It gives us a lot of opportunity to move forward with these projects as well. So
Yeah, so it gives us the opportunity to capitalize on things that we've kind of like previously, not really put much attention in, right?
yeah, and they're tried and tested. I mean, if this was one of the first, when Uniswap v3 first came out, I did a lot of work on Uniswap v3, and I think it's been kind of the crux of what I think is really just concentrated liquidity is a marvel for the decentralized space, right? It allows you to move positions very coordinated, liquidity positions that yield, like APRs above 13% is, in traditional finance, that's insane, right? Like, uh, I, so before I worked at Splinterlands, I actually came from high frequency trading out in Chicago, and I spent years out there working with a lot of large funds, right? Um, and back then, it was mostly about trying to, we're talking about like 2017, 2018, 2019. Um, back then we were going through ICO booms, right? And ICO phases. And so a lot of what was happening back then was mostly speculative. And as we've seen these markets begin to mature, we're seeing a lot of more price certainty products come out. And so you were talking about bonding, right? Bonding incentivizes people to lock up tokens and lock up liquidity for a period of time. And in doing so, you can basically effectively move that liquidity around, take advantage of things like concentrated liquidity positions, right? And so you usually have someone that's managing those positions behind the scene. And what they're doing is they're looking, the typical method for something like this is looking at the volatility of the token over the last 6 months, adjusting your position based on more recent activity. So, if you've seen a volatility, sway in price of 20%, then you would fix your positions to take in account for what that would look like, right? So you would adjust your positions. And typically in trading and professional trading, you're looking at things in episodes. So you would say, okay, my typical episode is going to be about 48 hours. That means every 48 hours, I'm going to make a prediction about where the price of the token is going to be, and I'm not going to touch it, right? So over the next 48 hours, I'm going to rely on the math to do the decision making for me, right, in my predictions. And, I'm going to leave my gut instinct out of it. So what they'll do is they'll adjust their V3 liquidity range, setting a high bound and a low bound on the price of the token or the pool. And then they'll let it sit there. And what's great is with concentrated liquidity, obviously, you're having much more efficiency in your capital allocation. So that means that you're having more money being used within a certain price range of the liquidity pool, right? And it's really been one of those things that's optimized the ability for people to generate very high APRs in their pools, right? So now you're starting to see 60% APR, 70% APRs. I've made, V3 pools where we hit, APRs. Like there was one, I don't know if many people here were familiar with NFT Worlds, right? When NFT Worlds launched their token, it was about 2.5 years ago. We were making, close to 15,000% APR, right? Like ridiculous APRs on V3 positions. And, you would double up your money in a day easy on some of these positions. I think they had airdropped something like $17,000 worth of tokens to us back then. And we were making $17,000 to $20,000 a day managing V3 positions on those pools because there was so much volume, right? The volume went absolutely crazy. And there's a lot of reasons why that happened. It happened because the price was going nuts, right? So people were able to arb those positions. You would see V3 positions are subject to what we call impermanent loss, right? Impermanent loss sucks. It's a real issue that you have to watch on these positions. But if it's a professionally managed position, usually that's what they're calculating their positions to take account for. And I'm not really going to go into what impermanent loss is on this conversation, but anyways, so you see the volume begin to pick up because the APRs begin to pick up on these positions. There's a lot of activity that's happening, and then you'll start to see that expand to other chains because you can go and create, liquidity pools on, if you're looking at, let's just say Uniswap, for example. I think they're on, let me see. I pulled it up. It's Ethereum, Arbitrum, Optimism, Polygon, Base, BNB Chain, Avalanche, and Cello, right? And then Sushi, I think Sushi's got well over 20 different chains that they're working with now. So those are all markets of opportunity, right? Those are all markets that are, basically ripe for the taking for the community here to work on, right? And to also develop liquidity positions. It doesn't mean that they'll all be profitable. It doesn't mean they'll all bring value, but there's opportunity and there's options, right? So that's why I said I'm very, very optimistic about this stuff. We haven't touched any of this at all. And, I'd say we've done relatively well compared to most of the other projects and most of the other tokens that are out there. But we still have a long way to go. And that's good. I mean, like I said, there's a lot of different ways that we can do this, right? So it's very exciting, and I think you are definitely on the right track. But I also think that we're going to see a lot of other great decentralized products come out, right? Bonding is one awesome use case, right? We're going to start to see a lot of derivative products. You'll also see a lot of real world asset products coming in. I think lending is also going to be, I actually firmly believe that lending is going to be the primary use case. Debt actually will be, decentralized finance is like primary motive here in the coming future. But these are all great things that are going to happen, that we're starting to see happen. That it'll be very interesting to see how we're able to take advantage of that. And like I said, I'm very, very optimistic about it.
Yeah, to me, I think that's the big thing is there's just so much growth potential, and we haven't capitalized on it at all yet. But I know we have a question, so I'm gonna get to Dave here in just a second. Well, one thing that I want to touch on too, whenever we, consider like expanding into multiple chains, and like potentially partnering with different like DeFi, decentralized exchanges, things like that. We also open ourselves up to more potential value for our community too, right? Like, I think it's Solana is the one that just had some massive. I think it's even still going on for like people that were using one of their dexes, right? It's getting like some massive airdrop right now, right? But being exposed to these different markets, we open ourselves up to new liquidity. We open ourselves up to new potential users. Like that's one of the things that I can remember for as long as I've been part of Splinterlands is like we've actually had people come in from back when we did the original Tron partnership. We've had people come in, yeah, like when we expand into these new chains and these new DeFi pools, they don't always bring in new people, but they definitely give us wider access to more people that are already crypto savvy and people that may want to get in before you start seeing like a lot of like the new player experience reform stuff that's going to make Splinterlands much more friendly to your average Joe. But let me see if I can get Dave in here real quick to answer his question.
For sure. And then I just want to touch on that while you're doing that. So, the way that I look at this is really more or less opportunity. And one of the weird and very interesting things that I've kind of noticed, and actually, Splinterlands was really the eye opener for me when I started working here, was the importance of guilds. I actually have this theory. It's a weird one, it's fringe, but guilds to me work very similar to how credit unions work. You have people who have, a combined interest in how they want to manage their capital. And, credit unions are not necessarily decentralized, but they're not centralized to the extent like a bank is, right? Credit unions are owned by the shareholders. So I look at guilds and I swear they act like credit unions, or, the way that they operate is very similar to how a credit union works. But the beauty of this is you have people that are all invested in a certain thing that they all partake in, like Splinterlands, for example. If your guild is invested in Splinterlands, but they're also playing the Splinterlands game, then you're kind of Splinterlands experts. You know better than most people would. You're invested in that game. You are incentivized to bring people in with you. You're incentivized to talk about it, and that's a very social thing that happens, especially in tokens, right? Before high frequency trading, I worked in influence, and I used to manage probably the world's largest influence, or let's say social media data company. We were larger than Cambridge Analytica. We would gather about 350 million people's information every single day. This is back in like 2013, 2014, 2015, before the 2016 elections debacle. But what I noticed there was that people typically, if you're looking at, very, very broad metrics about groups and how they act, it's a very sociological trend. People typically share their wins and not their losses, right? So this is very common in crypto. You'll have people who are out there talking about, oh my God, I bought Solana and it's 3x in the last couple months. It's been absolutely insane, but they don't tell you that before that they lost $10,000, or they were a part of some crash, or you never really hear about that, right? They'll typically that's a very introverted topic. They don't want to share it with everybody because it probably hurts, right? You have very few fringe cases where they'll have people talk about their losses, but for the majority of people, it's always talking and sharing their wins, right? And that's a huge motivator on price in the upward position, because it creates FOMO, right? And then it creates what we call a parabolic trend, right? People begin to see the price move. Therefore, it reinforces the fact that they thought they were right. They'll go and talk about it more, which incentivizes more people to come in. And, they don't care about price because they also think they're going to make 10x, right? And so the sociology behind that is very different, right? So again, I think, speculation is a huge part of what drives these markets, but behind the scenes, making actual yields and actually making markets that are tangible, that are usable, that have utility. Like I said, we have barely touched on any of this stuff. That's why I am so optimistic about it. But it is a lot of work, and you do have to have people who are actively watching the market in order to take advantage of that stuff. But when I look at guilds, that's basically what I see, and I see them being the middleman for something like what used to be banks' positions back in the day, and I see them doing a much better job than any bank that's out here today.
Yeah, for sure. I definitely think that right now we have so much potential, and we also have a lot of resources, right? And this kind of ties into what I think Dave's about to discuss here. But speaking of guildmates, I am actually in the same guild as Dave here. But one of the things that I think we definitely do have with the SPS DAO is we are sitting on a good bit of resources, right? And one of my biggest complaints was during the last, like the big declining bear market that was going on for like 2 years, is we were just doing nothing with these assets. And I want to say we went from something like 40, $50 million worth of just assets sitting in the DAO all the way down to like closer to 2 or 3 million. We got back up to closer to 10 recently. But I think one of the things about getting into these other pools, and also cutting off some of this inflation and turning it into revenue generation for the DAO, is it will ultimately help insulate us if we choose to go this way, and it'll help us to kind of like maintain some of that value, and I guess have less of all and all of our eggs in one basket situation. But welcome, Dave. You have a question for, I'm guessing, either me or PJ.
Yeah, and also I want to chime in and thank you, Clay and PJ. Great to have you here and talking about
Thank you
it.
very
So,
much.
can you
Absolutely,
guys
man.
hear me? Can you guys hear me? Okay.
Yeah.
10-4, loud and clear.
Okay, cool. One thing I wanted to talk about regarding all of this is it's very complicated, and the problem with our community is it's so complicated. We almost have to like simplify it where they can understand it. And I think when we get into finance type stuff, it can cause a problem. I'm not saying it does cause a problem, but it can cause a problem. So for instance, I agree 100%. I think Clay started out saying the current model is not sustainable, which is true. I mean, we have 5 years and we run out. Then what are we going to do? Are we just going to have no liquidity pools at that point? And if so, what are we going to do for liquidity? And like nobody even talks about that. So it's a huge issue, but it's not really understood by the masses. So coming up with a solution for that, I'm 100% for. But then when we get into more specifics, things like bonding, like I understood the bonding proposal that we did for Sushi Swap, and basically the only reason I didn't vote against it was because the marketing aspect. In other words, I didn't vote for it, but I didn't vote against it because everybody seemed to think it was going to be a good marketing angle. And I understand that. And I think that that should be something that should not be sort of, I guess, should be out front. Like the reason to do this is because the marketing. So, for instance, if we want to do Solana, blockchain liquidity pool for the pure purpose of drawing in people, I think that should be upfront and a stated goal. And I don't know if it has to be quantifiable, but I think it should be clear what we're paying to do that. Does that make sense?
Yeah,
100%.
yeah.
Absolutely.
And
And
just to kind of like touch on this too, Dave. I mean, technically, here's the thing: like we are sitting on millions of dollars of tokens. So like technically, you're right when you say like we don't have to pay for any of this. And I think that that's one thing that gives us a very unique position that a lot of these projects, especially like when they're starting out, don't have. That said, like currently, like as of like today, we're printing at least. Well, whenever it was closer to 3 cents, I did the math, and we were printing like a little over $150,000 a month. This is just inflation. We're just printing these tokens to basically rent
yeah,
liquidity. So even right now, with like closer to 2 cent SPS, it's still six figures. If we take that same six figures, even if we take like a little bit of a haircut on it, and we use it as basically the incentive to basically bribe these liquidity providers to go from the lending based model to the basically like buying based model, they'll still get their 60% APR, like whatever they need to be incentivized to do it. And instead of like us just basically paying out these tokens and then in 3 years or exactly however long it is now, um, you know the thing is they're gonna pull that liquidity when we stop paying them for it, right?
yeah, yeah.
So
And,
so
I'm with you, Clay. In other words, if we talk in terms of we're spending 100,000 a month, for instance, whatever the money is, right? Let's better spend that 100,000, or let's spend 80,000 and save 20,000 plus grow our exposure by doing X, Y, and Z. And I think that's a valid conversation, and one I would personally support. In other words, I think that we're very inefficient as well. So I think exactly what PJ said. We're basically we're just giving money to our own people. We're not spreading it out anywhere, and therefore we're not bringing any new people in. So I'm all for that, but I also think it's important that we do it head on, because I also think there's going to be some reluctance from the current LP providers to make that switch. So therefore, I think it's important that we don't kind of go through the back door. I want to go through the front door, and let's hammer it out. Let's hammer out what we're doing in a way that everybody understands and everybody's going forward.
yeah, yeah.
So let me point a couple things out here that you said, Dave, that I think are very important. First of all, um, from a marketing perspective, you said that you liked the way that sounded. It had kind of a good marketing point to it, correct?
You're talking about the sushi swap deal?
Yeah. Let's just take that
Yeah.
one for example,
Yeah,
right? Okay,
I
cool.
mean, because people think that sushi swap is a big deal, and we can say we have an LP on sushi swap, and
Okay,
there's a little marketing benefit to that. Yes.
it is. I dare anybody here to challenge me on this, but if you want to see correlating trends, right? Take the price of Axie Affinity and Splinterlands and Phantoms and Star Atlas and all these other Web3 products that are out there, and go and line them up side by side with Google search trends and look at the correlation. And what you'll notice is that the leading indicator of price is Google search trends, right? Why is that? It's because of word of mouth. It's exactly what I'm talking about. One of the things that I used to go and talk about on Wall Street was that blockchains are actually social networks of value, right? And what's really crazy about it is because blockchains are transparent, you can see everything that's happening because I can see every transaction that's going on. In fact, with companies like Goldman Sachs, we developed products that literally just found the most profitable wallets and followed everything that they did, and then would turn that into a marketing story, right? So that you knew exactly who to follow. It's like following Nancy Pelosi in stocks, right? Every time Nancy Pelosi buys, you know that stock's going to do really well because she's trading on insider information, right? And there's a million people that are going to do exactly what she does. So you have that come along that comes with it, right? But here in exactly what you're talking about is it's really just good narrative, right? It's a really good story. it doesn't necessarily mean that you have to do a lot, but it's really good conversation piece. But I like to put words to action, right? And I think it's very important to take this stuff head on. There are
Yeah.
obviously reasons why we would want to keep a lot of our liquidity on Hive, right? There's a lot of people that are incentivized to have liquidity stuck on Hive. It's good for their markets in particular, but it doesn't necessarily mean that that's where it has to all be sourced from, right? Another thing that you said too was it's very complicated. There's nothing that we can do to solve that problem. I absolutely agree with you. A lot of these things sound great on paper, but when you put pen to paper, you start to realize that there's a lot of additional risk that comes along with this stuff. I mean, we're including vectors for attack. Bridges are the number one reason for projects to actually have attacks, right? Because it's not necessarily the project who has everything locked down, but it's your bridge providers. And now you're having third parties that are involved, right?
Yep.
Then you have the volatility of other tokens having an impact, right? So you have to be very selective on who you want to start out or where you want your originating liquidity to come from, right? But for all of those disadvantages that you face with this stuff, I would say that because we haven't done any of this, get the option to pick where we want to start. And that, to me, is something that a lot of other projects really have just kind of blown out right out of the gate and done. And we haven't done any of this stuff. So I would say, with that, we don't necessarily have first mover's advantage, and we don't necessarily need it in this case. But we do have the understanding and the ability to see how the performance of these things have gone in the past. We can build off of the experience of others. There's already, I want to say close to $100 billion in DeFi that has been transacted across most of these decentralized exchanges. So there's a lot of money that's already been tried through this stuff. So I'm with you. I don't want to take this stuff on and just kind of shotgun blast into the market. I'd rather be much more technical and much more like a sniper and picking and choosing where we start and where these positions come from. But it's not something that should be done through the back door. I think it has to be done very apparent and make it very obvious what's going to happen, because one of the biggest features of this is that social currency that comes along with it.
Right. And by the way, I'm not opposed to it at all. In fact, if tomorrow we waved a wand and said we're taking all the inflation we print now and spread it across all the major chains and new liquidity pool type things, and this was going to be a great marketing tool, I'd be all for it. So my point is, I just want to make sure we don't do that at the same time, keep emitting the same amount and basically doing twice as much.
Well, that's the beauty. Oh yeah, absolutely. And that's the beauty of us being a DAO, right? Like I get to respond to what your guys' choices are, right? So I know what's possible. I know what we're capable of, right? But I think we let ourselves choose, because that's the things that we're going to vocalize. Those are the things that are wins, right? That's the social currency that we need. We need people talking about these things. We need people to be excited about these things. We need people to see that there's opportunity. And it's not just that, what is Splinterlands going to do for me? Well, to be honest, like, we can feed off of what the Splinterlands community has. You guys can build off of the momentum that you guys have already. And it gives you a lot of opportunity to go back out there and to also communicate with people who aren't necessarily a part of our community or have guilds that are in other projects, right? That will also talk to people in those projects about the opportunities that lay in front of us. So like I said, I'm extremely optimistic about it, because I kind of see all of the opportunity that we have, but we have to talk to each other. The community needs to figure out which direction it wants to move in. You've done a really good job around organizing people around this topic so far. But like I said, we still have a lot of work to do. There's a lot of communication that has to happen. And in doing so, I think we're going to notice that if you do what I said and go look at search trends, right, people will start searching for us, right?
Yeah.
So
I'm like I said, I'm all for it. I just, like I said, I like you said, being up. In other words, I think we need to educate a lot before we really do it right. I guess is my point.
Absolutely.
And I want to do it right. So therefore, we really need to get, we need people to really roll up their sleeves and try to understand exactly what are we doing, why are we doing it, and why is this better. And like I said, I'm actually on board, but I don't want to take the approach of like kind of sneaking into it where we do it, but we don't take away the other stuff. Like to me, that's I agree with the beginning, the very first point about the current model we have is not sustainable because it's simply not. I mean, I know where we stand right now. We, the DAO, is going to have to replace everybody, in 2.5 years. So right now, nobody wants to take away the deck SPS pool. Well, guess what? The DAO will be the deck SPS pool in 2.5 years if we don't do anything. Like, we'll have to do it. If that makes
Absolutely.
sense.
No, so
No,
we,
no, it
we
makes
don't
total sense.
we don't have a lot more of PJ's time because I know he's got to get back to work. But
Oh, I'm sorry.
one thing I kind of want to address here, Dave, is like to me, like if I have any agenda with this job at all, to me I really want the DAO to be self-sustainable, right? Like that's to me is the most critical thing because there's no guarantee like how long I'll be doing this. There's no guarantee how long any of us will be. But if we can set things in motion that will basically sustain the DAO going forward, I think anything we can do in that regard benefits all of us, in perpetuity. And that's one of the reasons why I think it's so critical to have the DAO take ownership of these pools and like, well, basically right now we're printing inflation. If we can turn that into something beneficial for the DAO, and we can open up these pools, even if it's not a lot, it's revenue generation for years to come, as long as we keep these pools open. And to me, like that's critical. We're taking something that is currently a net expense. It's currently devaluing our token, and we can even offer better incentives if we want to sell all that inflation with like a 5% discount. If we want to do the bond thing, like to me this is basically just trial and error. But like even if we want to do that, I dropped the math above where you can essentially pay it off in like 130 days. Like any expense that we incur with the sushi deal, like we set it right just by the very like minimal fees that get generated by that pool. So I think we have a lot of possibilities to create value for the DAO, and that's my thing. Just become sustainable, create value for the DAO.
So I think it goes even beyond that. Honestly, I think that we have been the subject to market forces because we've been so limited in our, all the different places that you can actually go and purchase our tokens. We've been kind of tied to some of the issues that decentral, I'll say, crypto markets in general have had the burden of feeling, right? There's been some real issues with finance in the past. That's caused problems. And, if we would have moved all of our eggs over to Solana, for example, we probably would have been out of business when they had their issues, right? And it allows people to kind of point the finger. But we have still got a majority of our assets tied up in Hive, and actually, I don't necessarily see that as a bad thing. Like I actually see Hive as being a stronghold for us because it is kind of on its own little island right now, right? And that's a good thing to have for where we keep, a lot of the, I would say, all of our reserve liquidity that we have kind of acts like our Fed, right? And that's what our DAO is to us and will be as we move towards the exhaustion of our inflation. But in doing so, again, you're absolutely right on the fact that these are complicated products, and it doesn't necessarily mean that we have to use complicated products. I mean, we can just move what we already do over to other chains, right? And that'll also, again, shore up and thin up some of the markets that we have on Hive, which is good because it means that we'll have less downward pressure and deep liquidity on Hive, and also allow us to, again, create some volatility on other chains, which will incentivize arbitrage and incentivize people to go and do yielding and earn yields on other chains. But the real added benefit here is the fact that we have something that we can look at cohesively and say this is a net benefit, and it's something to talk about. It creates social currency, right? There's a lot of value in that, and I think there's more value in that than most people are happy admitting. But it also gives us, like I said, opportunity to expand with other projects. And ideally, what will happen is, a lot of the the poor performing projects have already been rooted out, gone out of business for the most part. So we're in it for the long haul. And the way that Clay is thinking about this is very on par for where he should be, which is, we want the DAO to be able to sustain itself. But I think we have a great opportunity for it to become prolific, right? And we just haven't really seen a lot of this stuff happen because we've been so isolated. But we can change that, and I hope the community understands that too. And this is why I am, like I said, I am terribly optimistic about our options and our opportunities out there. But I don't think a lot of people really notice that, and what they see right now is very surface level. I mean, we haven't even begun to flex our muscles as a community towards any of this stuff. So again, I really appreciate the time that you put on this, Clay. Like, I think you're doing a phenomenal job, man. I do think that this is one of those things that we can sit here and talk about for days on end. But I would love to see this stuff happen, and I'm fully behind you guys. Like I said, I can help get this stuff out. I would love to hear feedback from people, also hear about their experiences, because I know not all experiences are positive with this stuff, but for the most part, I think it's a great learning opportunity too. This stuff is terribly complicated, as Dave said. If you're getting into V3 and permanent loss, or if you're getting into bonding, that is, typically tied to very high finance. So I wouldn't expect everybody to understand how it works. But when you get into it and you actually start to get your feet wet with it, it's not that complicated, but there is, managing positions becomes very difficult. So that's something that I would leave up to guilds or professionals who are trading behind the scenes. I'm not doing any of that stuff myself personally. I go and manage my own positions on different chains and stuff like that. So I would love to see our community step up, really just, take advantage of this opportunity and the timing right now, because I think the timing is absolutely perfect amongst all of this. I think one of the driving economic indicators for crypto markets or decentralized markets is actually wars and rumors of wars, which is terrible, but it tends to actually work in the favor of asset prices. I'm not going to speak about why. It mostly has to do with people being subjugated to thinking, okay, well, if there's wars, typically it means the government's going to print money, right? It's just a lot of things that tie into it from an economic perspective. But as it stands right now, I'm very optimistic, like I said, and I look forward to it. And I hope the community understands that we have a lot of options, which is really good.
Yeah, and I know we gotta kind of wrap things up because I'm sure Matt's not gonna let me keep you forever. But I wanted to let you know, After Sound left a comment on YouTube, and he said he hopes to see you jump on some town halls. He appreciates your perspective, and thinks that the community could benefit from it. And obviously, I agree. That's one of the reasons why I asked if you would come on. And I think that your skill set and your ability to kind of like help us expand into some of these things. Like, I feel like I have a decent understanding of a lot of DeFi. I don't consider myself an expert by any means, but I've been in this space for probably like 11, 12 years at this point. I've been in crypto for a while, so I'm not like ignorant when it comes to DeFi, but I feel like there's layers to it, right? Like there's different levels to it, and obviously you've been deeper into the DeFi side of things than I've been. So I appreciate that we actually have like somebody resident and like local to our community that has the skill set and can help us expand if we choose to do so. So I appreciate you coming on and sharing your time with us today too.
Absolutely. Again, anytime, man. I love coming on here talking about this stuff. I don't really get an opportunity too much now because we're a smaller team now at Splinterlands, but behind the scenes, we are cooking. We are very, very busy. I know you know what it looked like behind the scenes, working on the product, and we've been terribly busy as of late. But again, you reached out to me, man. I love talking about this stuff. I love talking about Splinterlands. I love our community, Dave. I very rarely get an opportunity to talk to you. It was great talking to you today. Yeah, and again, I support what you guys want to do 100%, and I can give you some more color on that. I'm happy to come back on here and talk about my experiences as well. and also show how some of this stuff works. I've built some amazing tools around Web3, token generators, liquidity position management, different. I've launched over 70 different NFT projects for massive companies, right? So I've just got a lot of experience in the space that I love sharing with people. Teaching and educating people is one of my favorite things to do. I think it's great for myself personally because it's a huge stress reliever, but also because I feel like it's very valuable. It's very useful. I do talk about it at a college level for the most part, but again, happy to provide material. I put together entire decks and presentations on this stuff. So if there's anything in particular that we would want to dive into, more than happy to spend some time preparing for it. Again, I really appreciate the opportunity. Like I said, I look at our community, first of all, I think is by far the most absolutely valuable thing that we have, right? It's just the fact that we have a lot of people who know and love Splinterlands. That is the hardest thing to build, right? And the fact that a lot of us have been doing this stuff for years. I consider myself a newbie, by the way. I came into Splinterlands in 2022, so I still don't think I have a lot to learn. And I'm not necessarily the most active player, but behind the scenes, I am helping work on the team, and most of my team are heavily invested in this. So I am, like I said, I'm very incentivized to come on here, help you guys out, and I love talking about this stuff. So just let me know.
Yeah, for sure. And I got to touch on a couple other things that are going to be related to different proposals. So I know you got to work too. So if you want to hop off, it's cool. Like I said, I
I'll
appreciate you coming
for a little
on.
longer. Yeah, it's all
Okay,
good. I'll hang on
okay,
here for a minute.
okay, cool. So yeah, guys, I just want to let you know, and since PJ's here too, we got really lucky. I was talking with investigator and kind of like stressing just how critical it is to get basically the pre-proposals on site because I was regularly getting complaints that people are either unaware of how the whole pre-proposal process is working. They're not comfortable going to third-party sites. Not only that, but like just like some annoyances with how frequent like the pop-ups are and feeling like they're obligated to vote because they can't get rid of these alerts. So, guys, I just want to tell you, I think it's gonna drop Tuesday. I can't promise, but all indicators that I've gotten so far are telling me that we're getting the DAO's kind of like voting update on the site. What do you think, PJ? You think it's this week? Uh,
Oh, sorry about that. So I can't tell you what is on our deployment schedule for Tuesday. We have a couple things that are dropping, but yes, we have been working on that. So
yeah,
uh,
like it sounded like
we have our
investigator was saying in the town hall he thinks it's coming too. So,
yeah. So I can tell you that we are in QA and we have our QA sessions today. That typically is our final go no go because we have two QA sessions throughout the week that we do. If you're familiar with how we do it behind the scenes, we have these what we call our QA swarms. I think a lot of you guys have probably been a part of them. But our final QA session for Tuesday deployments is actually today.
yeah, so I'm pretty excited because like one of the things that I've been thinking we need to do for years. Like I can remember, I want to say like the first like couple of months as an employee, like just talking about like we really need some tournament reform. And I look, I'm not going to tell you guys I know the perfect solution here, but I can tell you I trust that if we put forth options for the DAO, that they'll choose good ones. And we have 5 different proposals that are going to basically be dropping for a polling. And what we're going to do, like just assuming that we get this release, basically what's going to happen is, let's say there's 5 different options. We're going to essentially just allow everybody to vote and vote for or vote against the options that they like. And then what we'll do is we'll take the one with the most support, assuming it has enough support to go to a full vote. We'll take the one that the most people seem to be like in agreement for, and we'll do like a full vote for that. So basically, we'll start off with 5 options. So this way, like if you support like 2 or 3 different options, you have the ability to vote for those and vote against the other ones. And then we'll take the ones with the most support, And basically, you know, if that passes a full vote, that'll be the formats that we're going to use for tournaments going forward. My goal is the first round, I want to have format voting so we can pick and choose what types of tournaments we want, whether it's like alpha, beta, you know, modern, wild, whatever formats we choose. And then we're going to also have the regular foil, gold foil split proposals going at the same time. I would love if I could also get the proposal to apportion the rewards, but it would just be way too messy. We need to know what formats we want first, and then we'll go from there. But yeah, guys, so it's looking like some exciting times. We've got some, you know, we got a good development option coming out here, and you know, I'm really hopeful that by March we'll have some good solid tournament reform. We'll be able to get rid of some of the current problems that we're having. And you know, while this is going on, I'm still personally gathering information for how to basically better handle tournament entry requirements. Right now, it seems like they're inconsistent. They're very gameable. Like one of the problems we have is say like the gold foil alphas, for example. The big problem with them is it's very easy to just split your deck along multiple accounts, and then you'll end up seeing people running like, you know, 2 or 3 different accounts with their one deck split across it, or you'll see people running not leveled up cards. That is something that I want to clean up. I think of these things as actual exploits. You know, if you're not using adequate leveled cards, if you don't have a competitive deck, you shouldn't be able to dominate these tournaments just because there's not enough people involved. So I want to fix the requirements, make them more reasonable. Like I said, I'm still working on that, so I can't tell you guys where we're at exactly. But you know, I would say that my goal is by March we have some good solid tournament reform, and we you know, hopefully have everything kind of like falling in line with the will of the DAO. That was been one of my big gripes with tournaments, is that they were never, you know, like they were never like voted on or apportioned by the community. They were just kind of created and put out. And you know, especially when it comes to something like our token inflation, I feel like it's important that the DAO has a say in that. So you know, we'll see how it goes. And yeah, I'm optimistic. But you know, again, guys, thanks everybody for coming out today. I think I'm starting to lose my voice a little bit here, so I'm gonna try to wrap things up. But you know, again, thanks PJ for coming out. You know, I'm sure you and I are gonna have more conversations. We're still trying to get the sushi swap deal over the goal line here, guys. But hopefully within the next week or so, we'll have some progress on that, and I'll be able to tell you guys more.
Excellent. Yeah, thank you very much, Clay, and I appreciate it, guys. Thanks for having me on. Like I said, more than happy to come on here and talk with you guys more often. I don't necessarily get the opportunity to do so, but looking forward to it. And Dave, again, it was a pleasure. I hope to talk to you in the future. And yeah, thank you guys. Thanks for having me on.
Awesome. Thanks, guys, and everybody have a great weekend.